Hey, what's good, people? This your boy Cincy, aka Mr. Good Vibes, and welcome back to my YouTube channel. How are you guys doing? First of all, I just want to say Merry Christmas and wish you a wonderful Happy New Year in the year 2025. And my prayer is that everything that you wish for will be granted in this coming year in the mighty name of Jesus. Now, with that being said, I just need to ask you guys, how is your trading? How's life? How's everything, man? You know, the market has been doing some very erratic things lately, and me personally, I've been observing the market. And but with that being said, I took the time off during the holiday to enjoy some time with my family, and not only that, I also used that period to reflect on my trading for the year 2024. I believe 2024 was a fantastic year for me as a trader, as I definitely gained some valuable experience and also made some good money trading this prolific bull market but one thing I also did was, at the end of the year, I also brought out my trading journal. Yes, I would advise everyone that is trading currently to get a trading journal. So I brought the trading journal out just to write down some cardinal rules of some things that I did right and some things that I did not do right. And I also wanted to just make sure that these rules are going to be able to guide me in 2025 in order not to make those 2024 mistakes that I made, which is a good thing. I believe every trader should definitely reflect on their trading strategy, find better ways to make it improved, and definitely keep championing those profits. So today, I'm just going to make this video a little bit too brief, but I'm just going to be talking about the market trend in general and some of the things that I'm currently looking at. And I also talk about my strategy and how I have actually solidified it a bit, and the kind of things you guys are going to be seeing in the coming year. And some of the things I'm also going to be doing next year is I'm going to be definitely trying to grow a lot more small accounts, because I believe it's very important for me to grow smaller accounts, because I believe it's good to show the people and see the kind of money you can make even with a small amount of money. So I'm going to be doing a lot of small account challenges, and not only that, I'm going to be just showing you guys various instruments which I'm going to be personally trading. So I'm going to be very flexible this 2025. I'm going to be trading forex a lot. I'm going to be trading crypto as well. I'm going to be trading stocks. I'm going to be trading commodities and indexes as well, because the market is definitely volatile and we need to take advantage of this volatility to the upside when we once confirmed. Now, before the break came in, I did post a video and I said I do not trust this market, as I believe that the signs were already there that the market would most likely fall during this holiday period. I know a lot of us were expecting, including me, were expecting a Santa rally, but sometimes the technicals don't lie. So which is why it's very important for us not to just understand fundamentals of trading, but also understand the technical analysis side of things. The good thing about technical analysis is that it shows you a real-time representation of what you're currently looking at on chart. And if you're able to read it prolifically, you're able to read it very well, there's a big chance that you're definitely going to be a profitable trader in the year 2025. So with that being said, today I want to start taking a look at some of the major indexes which I take a look at in the market, and this gives me a general direction of where I think the US market is going to be going in the future. So the three major indexes that I'm talking about are the XPX 500. Yes, it means that there are actually roughly over 500 companies in this index that is being controlled by it, and these companies actually reside in the US. And this performance of this index generally gives us an idea of where we think the direction of the US market would go. Then we also have the NASDAQ 100, which again, as the number says, the top 100 tech companies in the US as of now, based by the market cap, I believe. And this is where you're going to find the likes of NVIDIA, Apple, Google, Netflix, Tesla, etc. You already know the gist. And the last one is the US 30, which is the industrial Dow Jones index, where we're going to be looking at stocks like BA, Home Depot, Disney, the banks reside there. And so so I look at these three indexes just to give me a general direction of the US market. So that's what I'm going to be looking at today. But like I said, I found different ways to improve on my strategy, and this is going to be something which I call indicator accounts, which is moving forward. I'm definitely going to be doing top-down analysis where I'm going to be looking at bigger time frames to kind of get the overall trend of what a particular instrument is saying. Then from there, we're going to break it down into the daily time frame, and from the daily time frame, we use that as a point of entry. Again, I'm going to show you a quick example of what I mean and why I personally did not participate in this market with regards to some of the things that I was saying. So as you can see on my chart, we are currently looking at the XPX 500 index chart, and you can see that we before the holiday, we had the FOMC meeting that occurred on the 18th of December, which was on a Wednesday, and we saw that huge drop down. You guys remember that huge drop down after the Fed chairman came out and said they were no longer going to be cutting we're no longer going to be getting 4 more cuts next year, and we're going to be getting only 2. And the market did not like that news, and we had this huge surprise drop that shook everyone in the market, including myself. But now, following the next couple of days, we had what we call a Santa rally, which was during over the festive period. So you can see we bounced off this support level, and the market went as high back to this channel baseline. But guess what? We saw a little bit of rejection there, and now we're tumbling back down to the previous support level that we saw during the FOMC meeting. Now, this is what I call a classic bull trap for those of us who were so excited and expecting that Santa rally. So the Santa rally this year was actually what I call a bull trap. Don't get it right, don't get it twisted. Now I'll show you again why I did not particularly take place in this trade, and some of the red flags that I saw that gave me the notion to just pretty much stay on the sideline, because there is nothing wrong in participating in a market that definitely doesn't look right, so that way you don't go ahead and lose unnecessary money. So you can see on my primary indicator, I'm getting, and again this is a daily chart, I'm getting an S sign and a red arrow already, and this is already telling me that there's a chance that this market is going to be falling to the downside. Now, and not only that, I was already now trading below my baseline. That is definitely a no-no for me once I start to trade below that baseline. So you can see on the 27th Friday last week, we were trading below the baseline. So that was also confirming a bearish indicator for me. Now, the good thing is that the good thing is that the Ichimoku cloud, however, the price is actually ahead of the Ichimoku, is above the Ichimoku. That is always a bullish sentiment, but there are some times whereby you would find the cloud below the Ichimoku that would indicate more of a strong bearish sentiment in this case. So you can see the entire 2024, the price was definitely above the Ichimoku for the most part, but found support inside the cloud for the most part. So you can see the 2024 chart looks prolifically bullish as you see it on my chart. Excuse me, that's my boy crying in the background, but we're going to keep going as we do not want to get ourselves distracted. So once I've confirmed this sell signal, as you see on my primary indicators, I start to look at my secondary indicators below, and you can see down below are some indicators. And now what you see here, you're going to see that the first one is a 2-line cross, which I typically use to see if there's an alignment between these and what I'm seeing on my primary indicator. So you can see whenever I see a cross, or when the green is above the red, that is always an indication that this is a bullish signal. But now, one thing you also have to understand is we also have positive and negative numbers, because there are some times we could actually get a crossover in a negative side, which will still indicate some type of bearishness. But you can see we're seeing some kind of reversal or bullish reversal in this indicator, which was telling me, okay, that is not in line with what I'm saying on my primary indicator, which is telling me it's a sell signal. So this is more of a mixed signal in this case. And when I start looking at this other indicator, you can see my 0-line cross, my signal line is above. You can see it's on the positive side. So if you're on the positive side, that is definitely telling you a bullish signal. But if you find yourself in the negative side, that will be more of a bearish signal. So the fact that we are still on the positive side indicates more of a bullish signal with this indicator. Now, this other one on the other hand, again, you can see that I have a 0 line, but I also see a color change. And how this works, you can definitely see that I do see a color change from red to green. However, the value or the signal is still below zero. So we have what I call a bullish reversal signal, but still in that bearish territory. So you can see that this one too has some sort of mixed signal with the signal, but on the other hand, this one, however, has a zero line. You can see my signal line is actually on the negative side, telling me that this is a bearish signal for the SPX 500, as it's already showing me some warning signs to be worried about. And the last one is also showing me that the red color is above the green, and that is definitely a bearish signal or a sell signal, which I also want to definitely take seriously. Now, remember what I said, I want to do quite a little bit of top down analysis this year, and what I'm going to be doing is I'm going to be combining or what I'm going to be doing is what I call an indicator count, which I'm going to be counting the amount of bullish indicators or bullish signals versus bearish signals on both the weekly time chart and the daily time chart. I will combine them together, and as a result of that, I will use that to gauge what I think the direction of that instrument will be. So for example, I created a spreadsheet, as you can see, and on this spreadsheet, take for example this instrument XPX 500, right, which is the chart we are currently looking at. You can see by the time I calculated the amount of bullish indicators against the bearish indicators, so you can see I have the X and I have my O, which is my green and the red. So for those of us who have been watching Squid Game lately, which I watched over the other day, and that's actually where I got this funny idea. There's a part in Squid Game whereby after every game, the team has to come together and vote if they want to opt out of the game. Now, if they get majority of the votes of opting out of the game, then they get to cancel the game. But if majority of the vote says that they want to stay in the game, then that means they have to play the next round. And before they go, they have to pick I think it was the X or O team, right? So each X and O represent different colors. So I think the X color was the blue color and the O color was the red color. So if you pick the O color, the red color, it means that you're opting out to leave the competition. And if you pick the X color, the blue color, it means that you're ready to stay in the competition and go to the next round for the big money, which is kind of like how the market works. Some of us get too greedy and don't know when to get out of the market. So you can see that, but in this case, the green color represents buy and the red color represents sell. So by the time I counted the amount of buy signal versus sell signal for the XPX 500, you can see it came down to 12 to 10. So again, we are calculating both the daily. So the D represents daily and the W represents weekly. So I just showed you guys. So for example, the ASGMA, and by the way, I'm going to be revealing a lot of my indicators this year. So don't be surprised when you start seeing the name. So you can see the ASGMA daily, for example. The ASGMA daily, for example, is showing me that, you know, I see my sell signal and I see my red arrow. So immediately I see my sell signal. What that is telling me is that I check my ASGMA on the daily as a potential sell in this particular case. So if you go back to the chart, you can see on the daily, at the time when I actually even made when I even made this call, it was actually the B sign and the green arrow. But now, because I'm getting this S sign and the red arrow, you can see that I should actually move this number right here, because it's more of a sell right now, and the SSL on the daily is also more of a sell for the SPX 500. Now, if you look at the Ichimoku on the other hand, the Ichimoku daily is pretty much telling me, is the price above the Ichimoku or is it below? Remember what I said, if the price is above the Ichimoku, then that is more of a bullish sign, but if the price is below the Ichimoku, then that is going to be more of a bearish sign. So the fact that the price is above the Ichimoku, that was why I scored the Ichimoku 1 for the bullish signal. So you can see on the baseline, remember, if the price is above the baseline, then that is a bullish signal, but if the price is below the baseline, then that will be more of a bearish signal. I hope I'm communicating. So you can see in this case, the price is actually below the baseline. So that is definitely a bearish signal. So you can see I have my baseline here. I also have my channel baseline, as I also want to see the price go into the channel baseline, and sometimes that could be a place for us to kind of like, you know, retrace back to where we're supposed to be going originally. So I like the fact that the price was trading below the baseline, so that was telling me this is going to be more of a sell signal, which is why if you go back to my indicator count for the baseline, I put the sell signal as 1 for the red side. Now the SMI1 and SMI2, that is pretty much telling me my secondary signals below, are they bullish or bearish? Remember, we have a crossover, which is a bullish signal, but we also have a crossover that is above the 0 line on the positive side. So that is 2 points for this indicator, which is why if you go back to this indicator count for my SMI 1 and 2, I scored it for 1 and 1, and this one is called the DD index. So if you go back to the DD index, this is the chart, and this is my DD. You can see that my signal is above the 0, and that is definitely a bullish signal, which is exactly why I scored the DD index with 1 point as well. Now the MACD 1 and MACD 2 on the daily, you can see they actually have to share 1 point each, and the reason is because, come down to the chart, the MACD chart, what we see is there's a color change from red to green, so that is definitely one bullish sign. But the problem is the switch or the reversal is still below my 0 line, which is still indicating more of a bearish signal, which is why I give them 1 and 1 together. So you can see that is definitely a 1 and 1 for the MACD. Now the TSI is on the bearish side, and the ASH is also on the bearish side. Because why? If you go back and see the TSI here, the signal is on the negative side, and that is indicating a bearish signal in this case, which is why I give it a 1. And if you look at the ASH as well, you can see we have a red above the green, which is also indicating a bearish signal for this indicator. So now if I do the same thing for my daily and I switch to weekly and I do the same count, so you can see that is what you see, or that is what they represent, or that's what these actually represents on my chart. As a matter of fact, I need to change this color to a red, so you can see by the time I did it for the weekly and I did it for the daily and I sum up those points, what you see on my indicator count is that I have 12 sell signals or 12 bearish signals versus 10 bullish signals for the SPX 500 using my own algorithms when I compare both the daily chart and the weekly chart. So the fact that I'm seeing more bearish signals on these two charts is telling me that there's a chance that this could actually go to the downside. But now the numbers are pretty close. I don't want close numbers. I want a little bit of a big difference. For example, if you look at an instrument such as this USD SGD, you can see that I'm getting more bullish signal compared to bearish, about 17-5. This is definitely a clear cut bullish signal. But the fact that this is more of a 10 against 12, it looks like it's a little bit mixed. And the same thing if you go to NAS 100 on the other hand, I was getting more of the bullish signal with respect to the bearish one. So I was getting 13 more points for the bullish and I was getting 9 for the bearish. So you can see for NASDAQ 100, which is where you find your Amazon, your Google, your Teslas, you can see that this index is showing me that this could still be fairly bullish with respect to the SPX 500. But the US 30, which is the industrial or the Dow Jones Industrial Index, you can see that this is giving me more bearish sentiment or more bearish signal with respect to bullish signal. So you can see combining those three indexes together, I was getting what I call a mixed signal. So a mixed signal for me doesn't necessarily do me any good in the volatile market, and the reason is because any change in sentiment in the market can easily create volatility and see a spike up or down. So because of that, I decided to just kind of like stay out of this market for now and just kind of monitor it from the outside and just trade the forex market or trade another market that seems to look a little bit favorable or that has the right setup. Now again, it's not by force you need to trade the market, which is something a lot of people don't get. Some of us were expecting this Santa rally like it was our birthright. No, sometimes that might not necessarily be the case. You need to be able to read your chart and read the room and understand what is actually coming up front in the future. So you can see I've showed you guys how I'm going to be analyzing things moving forward, and I've actually compared these three indexes together. You can see it's a whole bunch of mixed emotions that is currently here. Now, I want to also talk about cryptocurrency, because I know a lot of people are still in the crypto market, and because of the incoming president, and you understand that this particular presidency and the parties and the people that are going to be in power are definitely pro crypto. So we are all expecting the next bull run or next bull cycle for crypto. Now, however, with that being said, remember what I said, we cannot get too sentimental and think that because of this is the case, these guys are coming in, then that's going to be what's going to happen. Sometimes you have to just dial back, look at your chart and see what your charts are actually saying. So you can see for Bitcoin, when I did my analysis on the indicator countdown, what I see is that I see more bearish indicators for Bitcoin with respect to bullish indicators. You can see that when I compare both the daily and the weekly, this is the outcome of things for Bitcoin. And this is one of the reasons why I was not necessarily fully bullish on Bitcoin over the holidays. So for those of us who leverage trade, I would advise you to be very careful out there, not to go over leverage and go start buying more Bitcoin, or in fact start shorting more Bitcoin. Because if you look at the numbers, you can see that the difference between the two of them is not that far away. It's just 3 points between the two of them again, and it's just a matter of time before they become a tie, then it becomes more of a mixed signal. So again, I know some of you are looking at this and a little bit confused, but let's just take a look at the charts real quick once again for Bitcoin and see what is Bitcoin exactly saying, and so that way we can understand what the future of Bitcoin is saying. So you can see Bitcoin is currently down 1.2% today, which is about 1,133 points for Bitcoin. Again, Bitcoin, you can see Bitcoin, this was the initial all-time high for Bitcoin, and you can see that we have retraced how many percent from that level. If I can get this right, we have retraced about, let me see, according to this, it's telling me we retraced about 15%, about 14% from that all-time high section that we came from, and it is not too bad. So if you start to look at certain things, and again, this is the weekly chart, one thing that does discourage me right now is the fact that we are trading below this baseline. But you can see that if you come down below on the secondary charts or secondary indicators, what you will see is that we are beginning to get some bearish or reversal indicator in the Bitcoin. But again, this still happens to be on the positive side, but you can see definitely that the reversal indicator is there, that there's a chance that Bitcoin could actually go down in the near future. Again, this is the weekly chart. You can see that the signal line is beginning to go below the zero line, and that is definitely indicating something more bearish for Bitcoin. Finally, if you look at this one, you can see that we've gone from green to red. You can also see the red arrow, but we are still on the positive side. It's just a matter of time that this will continue to go down and down until we cross this zero and become super bearish. But you can see now we do see the reversal signals in the candles, but we are still on that positive side. So it's a little bit of a mixed signal here. But if you look at this indicator right there, you can see that the signal is still on the positive side. So this is still definitely giving me a mixed signal of some bullishness, and you can see that my indicator here too, the green is above the red, is also giving me some type of bullish indicator. So again, I'm not completely sold that Bitcoin is most likely just going to drop down to the 80k level or 70k level, but in a situation where it drops, I think that would be a good support level to start buying more. But for now, I'm still going to be monitoring it until I see the perfect setup. In fact, if you go to the daily chart, what you see on Bitcoin is very, very obvious. You can see that we see a lot of bearish sentiment as we see a red arrow to the downside. You can see the most current signal for my ASGMA is a sell signal. So if you combine these two, definitely primary indicators are indicating sell signal. And if you look at the secondary indicators below, you can see that I'm seeing red higher than the green, and you can see it's actually on the negative side. So we are getting a bearish signal on top of a bearish signal. So this is a double whammy, and which is why if you come down to my indicator count, you can see for BTC, I actually gave BTC currently 1 for the SSL. Actually, at the time I did the SGMA was actually green, so So it was actually red. So the SSL would now have to actually have this one, because you can see the current chart is giving me a red arrow today. So you can see this is what this is doing, a red arrow today. So you can see that this is telling me this is definitely a bearish signal. So you can see that we've actually gone again an extra point, 14 to 19, which is 14 sell signals with respect to 9 bullish signals for Bitcoin. So you can see Bitcoin's case for a sell signal is getting stronger and stronger and stronger. So maybe taking a short position on a leverage broker or leverage trading can actually be a smart idea as respect to you trying to go long or trying to buy the dip. Or again, better still, just stay on the sideline and do absolutely nothing and just wait for the right setup, just like myself. But if I do take any position, I'm definitely going to be taking a position to the downside for BTC. But you can see on the daily chart that there are evidences that this could actually fall more. So now you can see it's actually sitting at a critical support level, and in a situation whereby if we break this critical support level, that we could actually go down and go test this 80k level. Yeah, there's no saying that we could actually go down and go test this 80k level, you know, with no support in sight or with no selling in sight. So again, this is going to be how I'm going to be trading. I want to trade a lot more smaller accounts next year. I want to be able to build small accounts and show people what is definitely possible. And I believe that using this indicator count and this more modified way of using my strategy is definitely going to get me there again. And it's also going to allow me to avoid some certain trades that might not necessarily look favorable. Again, there's nothing wrong with you being on the sideline and not losing money. Not losing money is definitely making money in my own books. Sometimes when you lose money for unnecessary reasons, or for you just placing a trade without having a game plan in mind before you actually place it. So expect a lot of more of these in the near future. One other stock that I saw today that could be a potential entry or good place to buy was Google. I saw Google today. Again, we are still going to be very careful, but Google actually dropped. You know, Google was actually trading at this level. It went as high as 202. I believe that was the all-time high for Google. And if I zoom back in, you can see Google fell from that level and fell into what I call my buy channel. So this is a new channel moving average which I introduced, and it fell into my buy channel moving average. And I like to see what is the trend of this instrument at the level like this. By the time I went and I did my indicator count on Google, this is exactly the kind of turnout that I got from Google. You can see for Google, I was seeing about 17 bullish setups as respect to 5 bearish setups. This makes me believe that this might be a good point for me to go into Google and start buying some Google positions, as I believe Google could retrace back to its all-time high in a situation whereby the market volatility goes back down and the market decides to reverse back up. Again, this is all what I'm seeing on the chart. Even though that the general market setup looks bearish, there is a chance that we could still get this Google to go to the upside. And that's how I'm going to be trading the market. I'm going to be trading multiple instruments this year, and I'm definitely going to be displaying my watch list. So if you go to my watch list, you will see something like this. If you look something like this, I will tell you what I'm looking at. And if you see my open positions, I will tell you what I'm actually opening currently and what positions and what direction I'm actually going in this multiple instruments. So if it's an open position, it's going to be in blue, and my watch list are going to be in yellow. So it's going to be a lot of fun next year. I'm so excited. I'm so glad that I went through 2024 and gained a lot of valuable experience, which I'm going to be taking into 2025 to make me even a better trader and also make me even more profitable. Because 2025, I want to help a lot more people. I want to show people what's possible, and I also want to be ready when I do this. Okay, all right, I hope I'm communicating. I hope you guys understand what I'm trying to say. You can just stick with me. And again, if you do like what I'm saying, what I'm asking for you is to like, share, and please don't forget to subscribe so that my channel can grow and reach out to more people who like to see content like this, because I believe trading is very, very important and it's definitely going to be more important in 2025, as there's going to be a lot more action to expect in this volatile market. Again, once again, it's your boy Sensei, aka Mr. Good Vibes, and let's make some small money together, even if it's just a little.